Good morning, everybody. Welcome to another Daily Market Report project by Mike Bjork. Today is Friday. Happy Friday, everyone. And it's Friday the 13th. Wow. Hopefully, we can get a little lucky today. We got a couple items here on the economic calendar, so let's begin with that. We'll start off with the import price index for the month of February. January, it rose 0.1%. However, in February, it declined by 0.5%. So, consumer sentiment is the next one on the docket. And for the month of March, we had a 101 in our last one. And forecast is calling for it to dip a bit, but however, remained unchanged at 101. So let's jump over to the headline news because this is kind of what really matters, what we've been seeing more as these economic data really haven't played much of a role in our markets. So stocks are up a little bit this morning. They were up a lot more. They're off of their highs. Dow, I guess, was up nearly 1,000 this morning. Now it's been getting in. Now it's down right around 300. So it's off of its highs. And of course, yesterday was the worst day in the stock market since 87, I think they said. So yeah, we lost like 2,400 points on there. Now, there's talk that President Trump and Pelosi, the House, may have something coming up, hopefully, in terms of a stimulus. We're still waiting on that, and nothing's been formally announced yet, but sounds like they're working together, bipartisan, and trying to come up with something for us. So we're still waiting on that. Yesterday, we've been having some liquidity issues in the banking industry and the finance markets. And so the Fed went and made some uh, basically, easiest way to describe it is just simply say that they're pumping liquidity back into the markets. And a lot of this has to do with the restrictions from, back when the Dodd-Frank, when we have, they can only, liquid, liquidity purposes, they only use about 10%. But and because other things are being held by paper, so basically the Fed is offering to buy, their notes and stuff like that to create more liquidity in the market, and so that way banks have more money to be able to use for liquidity purposes. So there's not much of a run and clogging things up. So that's kind of what it was. There was that point yesterday where people initially thought it was a quantitative easing, and it wasn't. It was just something that they were trying to alleviate some of the liquidity, or at least create more liquidity in the markets to help them out a bit, to keep the businesses moving as well as possible. So let's see how this is playing on the bond market. And bond market was, we're getting back and forth. We started the day lower. We're right up here against the 50-day moving average. And it's like a double ceiling here with this ceiling of resistance and the 50-day moving average. As you can see by the wick, we were up even higher. Right now, we're up about 5 basis points, but we've been kind of dipping into positive and negative territory. If we can get back into more of this positive territory, this could be a good sign for us so that we could see a positive trend developing again after this long week of huge losses. So let's keep our fingers crossed and see if we can get some positivity out of today here. Um, Also, as you can see here, we are up even higher on treasuries, and treasuries are yields are up about 8.86. I think it's at 0.86 currently, and kind of right now they're kind of in this sideways pattern here. You know, they've had a little bit higher and pulled back, but currently we're kind of this sideways pattern um, where we're seeing right now. All right, so that's pretty much a wrap for the day. Mortgage rates, of course, you know, uh, it's a good question. Mortgage rates are just been kind of taking a bit of a beating. They were up about 30 basis points earlier today, but I'm going to say they're unchanged from where we left off yesterday. We've had some crazy price movements, price swings going positive, negative territories and stuff that it's hard to keep up with it. And right now, I would simply say that rates are about the same as where we left off, unchanged at this point. All right, so if you guys are looking to buy a refinance and are in California, feel free to reach out. We'd love to be able to talk to you on how we can help you guys out. Either direct message me or email me. Those would be the best ways to reach me. Uh, Email is probably the best. I do get that a little bit quicker, and I can respond a little bit quicker to those. All right, you guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye bye.